Welcome to the deep dive. Today, we're really getting into the weeds, looking at the Bausch Health 2024 annual report.
Yeah, that's right.
And this isn't just, reading numbers off a page. We want to pull out the story behind them. What's really going on strategically? What does it mean for you trying to follow this company?
Exactly. It's like a map, isn't it? Shows where they've been, but also hints at where they're trying to go. We'll hit the main parts: Salix, International, Solta Medical, Diversified, and of course, Bausch plus Lom.
5 big areas.
Each with its own flavor, its own challenges.
So our mission today, get past the surface stuff, understand the core performance, figure out why the financials look the way they do, and clarify their plans. Should give you a much better grip on Bausch Health.
Sounds like a plan.
Okay, let's dive in. Where should we start? The business segments seem like the foundation.
Yeah, let's start there. Salix makes sense. It's their GI business, mostly U.S. focused.
And heavily reliant on one product, right?
Yeah.
Ciascar.
Oh, absolutely. It's huge for them. Represents something like 85% of that segment's revenue.
Yeah.
Massive concentration.
Wow. So what's the strategy with a product that big? Just keep pushing it.
Pretty much, yeah. Maximize its reach, its lifespan. You see them putting more money into direct-to-consumer ads.
Right, getting the name out there to patients.
Exactly. And they're beefing up their sales force, too, trying to really capitalize on that asset.
But are they looking beyond just the current Xifaxan? Any innovation happening there?
They are. They're working on a new formulation, this rifaximin SSD, they call it REDC. It's aimed at complications from liver cirrhosis.
Ah, okay. So planning for the future within GI, not just relying on the current cash cow.
Precisely. And, they do have other GI products. There's Realister for opioid-induced constipation.
Right.
And Trulance for IBS-C and chronic constipation. They add to the mix, even if they are on Xifaxan scale.
Makes sense. Diversification within the segment, even if one product dominates.
But the big challenge for Salix, and we'll probably circle back to this, is Xifaxan being picked for the Medicare drug price negotiation. That starts hitting in 2027.
Yeah, that's a significant risk factor down the line. Okay, what about the international segment? Sounds broader.
It is. Branded drugs, generics, OTC stuff, but all outside the U.S. and Puerto Rico. It shows their global reach.
So different products for different regions.
Totally. You've got diclofenac, the pain med, big in Eastern Europe, then Contrave, or Mysimba, as it's known elsewhere, for weight management in Canada, Central Eastern Europe.
Okay.
And even things like Espavin for digestive issues down in Mexico and Central America. It's a real mix.
So the challenge there must be managing all those different markets, regulations.
Definitely. And currency fluctuations are always a factor with international sales. Hits the reported numbers.
Got it. Let's switch to Solta Medical, the aesthetic side.
Right. Medical devices for aesthetics. They position themselves as leaders. And Thermage is really their star.
Skin tightening.
Yeah. And they're pushing the latest version, Thermage FLX, rolling it out in key markets. That shows the innovation focus.
And expanding access, too.
Investing in getting the tech out there, strengthening sales teams in the U.S., Europe, Asia. So it's product upgrades and market penetration.
Competition must be fierce in aesthetics, though. Staying ahead.
Always. Technology moves fast, consumer trends change. That's the name of the game there.
Okay, then there's the diversified segment. Sounds like, well, a bit of everything.
It is a bit of a catch-all, yeah. U.S.-based. Covers neurology, dermatology, generics, even dentistry.
Any standout products there?
Well, in neuro, they have Myceline for seizures, and they distribute Xenazine for Lundbeck, which treats Huntington's-related issues.
Okay.
Derm includes Jublia for toenail fungus and Silic for psoriasis. It provides some balance in the U.S., but lacks that single big driver like Salix has.
So growth depends on how each of those distinct areas performs?
Pretty much. Managing competition across generics, branded drugs, it's complex.
And that leaves Bausch plus Lom, the eye care giant.
Yeah, huge global presence. Vision care, surgical equipment, eye medications. It's a major part of the overall company.
Growth there probably comes from new lenses, surgical tech.
Right. New product launches are key, plus just maintaining their strong position globally. It's a competitive space, even for a big player.
Okay, that gives us a good feel for the different parts of the business. Let's pivot to the financials. What are the big numbers telling us? Revenue first.
Okay, top line. 2024 revenue was $8,079 million. Just over $8 billion.
Which was down from 2023, wasn't it?
It was, yeah. 2023 was $8,757 million. But you got to look at why. 2023 saw good growth in several areas. In 24, they faced some headwinds. currency, like we mentioned, and also some divestitures had an impact.
Right. They talk about organic revenue to adjust for that stuff.
Exactly. It's a non-GAAP number they use to show the underlying performance, taking out currency swings and M&A effects. Gives a clearer picture, maybe?
So underlying business might be steadier than the headline number suggests. What about the bottom line? Profitability.
That's actually a more positive story for 2024. The net loss attributable to Bausch Health was way down, only $46 million,
Compared to?
compared to a $592 million loss in 2023, so a huge improvement.
Wow, okay. What drove that turnaround?
Primarily a better result in net income before taxes. And their operating income jumped significantly, too. It was $1,546 million in 2024, up from $963 million the year before.
So I guess operations are getting more efficient.
It does, yeah. And looking at where the profits came from by segment 24, Salix brought in $1.6 billion, Bausch plus Lomb over $1.1 billion. Those are the big contributors.
That narrowing loss is definitely key. Okay, let's peek at some specific income statement items. R&D spending, crucial for pharma.
Absolutely. They spent $616 million on R&D in 2024.
Up slightly.
Up slightly, from $604 million in 2023 and $529 million in 2022. So there's a consistent upward trend in investment.
But as a percentage of revenue.
It's hovering around 6%, which
Yeah.
is, something to benchmark against competitors.
Okay, interest expense, still high.
Still very significant. $1,388 million in 2024. That reflects the big debt load they carry.
Right.
One thing to note is the gain on extinguishment of debt was tiny in 24 compared to a big gain in 22 from restructuring. That affects year-over-year comparisons.
And loss per share improved along with the net loss.
It did. Much closer to breaking even, down to a loss of 13 cents per share in 24.
Okay. What about the balance sheet? Any red flags or highlights there?
Well, intangible assets are significant, about $1.6 billion, mostly product brands. They did have some goodwill impairments in previous years, which isn't ideal, means they overpaid for some past acquisitions, essentially.
Okay.
And they're carrying about $332 million in accrued loss contingencies. That's money set aside for expected legal settlements. A reminder of ongoing risks.
Right, the legal stuff. And cash flow, how did that look? Did they generate cash from operations?
Actually, net cash used in operations was $134 million in 2024.
So operations didn't generate cash overall.
Not on a net basis for the year, no. However, they brought in $626 million from financing activities.
Meaning more borrowing.
Largely, yes. New debt, like that $400 million loan facility for B plus L, though they did repay some other debt, it shows they're still relying on financing markets.
And what does that mean for free cash flow? Operations minus capital spending.
That was negative in 2024 as well, meaning after investing in things like equipment and facilities, they were burning cash from their core business activities overall.
Okay. So managing that debt is clearly critical. What are they saying about that?
It's a constant focus. They talk about evaluating refinancing options, potentially buying back some debt if conditions are right, issuing new debt. You have a usual toolkit.
Are they meeting their loan requirements, covenants?
They were in compliance as of the end of 2024, yes. But they're upfront that if things don't go according to plan, they might need to cut costs more, sell assets, refinance again, maybe issue stock, or even sell more of their B plus L stake.
Lots of levers, but it underlines the pressure that debt creates.
Absolutely. Debt management is central to their strategy right now.
Okay, so looking forward, how are they planning to create shareholder value? Are dividends or buybacks on the table for Bausch Health itself?
The report really emphasizes long-term growth through their capital allocation. So that means strategic acquisitions, pumping money back into R&D.
The pipeline?
Exactly. Licensing deals to bring in new products, investing in infrastructure. They also set up this patient access and pricing team, presumably to navigate pricing pressures better.
So less about immediate returns like dividends, more about building the core businesses.
That seems to be the focus, yes. Strengthening the main segments, managing the debt. The idea, presumably, is that leads to better profitability and value down the road. No explicit mention of Bausch Health dividends or buybacks in what we reviewed.
And the B plus L separation is still potentially part of that value creation plan.
It's still on the table, yes. They see it as a way to potentially unlock value, but they're clear there are risks and uncertainties that could delay it or stop it from happening.
So that B plus L situation adds another layer of complexity.
Definitely. Now, within B plus L itself, they do mention potential share-based compensation for employees there, which is a form of return, aligning management with shareholder interests in that potential future entity.
Okay, so putting it all together, assessing Bausch Health. Now, moving forward, what's the verdict?
Well, you definitely see improvement in the 2024 financials, particularly that reduced net loss. That's a positive sign.
And the focus on core segments, R&D investment.
Right, those are pointers towards future growth potential. But, and it's a big but, the challenges are still huge. The debt is significant. Competition is intense everywhere they operate.
Regulations, the economy?
Exactly. Healthcare reform, pricing pressures, economic uncertainty, plus ongoing litigation risks. It's a tough environment.
So success really hinges on navigating all that.
Yeah. Can they manage the debt effectively? Can they innovate successfully and keep that pipeline fresh? Can they execute on their strategies, including whatever happens with B plus L? And can they handle external pressures like the JFAX and price negotiation? Lots of variables.
Okay, so quick summary. Bausch Health, complex company, diverse segments, showing better financial results, investing in the future.
But facing major headwinds with debt, competition, and strategic questions like the B plus L split.
That sums it up well. All right, here's something for you, our listener, to think about. We talked a lot about Salix and how crucial Xifaxan is, but also how it's facing future pricing pressure. So the question is, how might Bausch Health need to shift its focus, its investment, across those other segments, international, Solta, diversified, even B plus L, whether it's separate or not, to build a more resilient path forward, less dependent on that one product?
That's the multi-billion-dollar question, isn't it? Balancing the portfolio for the long haul.
Definitely something to chew on. As always, we encourage you to check out the full annual report if you want all the granular details and keep watching those broader industry trends. Thanks for joining us on the Deep Dive.